Trading is all about luck, you know. I must qualify that. You know, it's all recorded. The biggest element of luck in trading is the market volatility. That part is luck. The rest are skill. The ability to trade is not on luck. The ability to trade is a skill. Very, very simple skill. But the luck element comes in is that what kind of market are we getting tonight? That part is nothing to do with your skill. It has to do with your luck. Right? If you were here trading 2 hours ago, then you're very lucky. You know, in the last couple of hours it dropped so much because you know, German unemployment data was expected to be better. It didn't get better, so they sold it down. And then you have a lot of politicians, Finnish prime minister, and all that, all while entering into tonight or to them in the afternoon, 1 o'clock, you submit. Everybody passed a few comments, and so far all the comments are not supportive of Eurobond and all that. So you find that everybody also continue to sell it down. So are you lucky? Actually not, because you were having dinner and I was having dinner, you know. So, but I was lucky. I bought one whole chicken for dinner, right? 2 days ago, I wasn't so lucky. I bought one chicken because you know why? Half a chicken is $14. One whole chicken is $18. What would you do? You buy a whole chicken, cut in half, bring half home, and eat the other half, right? Then after that, when I had coffee, I left the chicken behind. That was the most expensive dinner. So today I remember I held on to the half chicken while I eat my dinner. Then when I get out, then I met my son. Then he took it away and eat. So again, very unlucky. So it depends on your luck. If you're lucky, you were trading the last few hours, the market go down, then all you do is sell, 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 right? Your skills are there. But if you're unlucky, in the next 2 hours, nothing moves, then there's nothing you can do, okay? So the element of luck in trading is the market volatility, nothing to do with your trade. You have to be skillful to trade in all market conditions. So I was trying to say is that if you are very lucky, today you will see the breakdown of 124. Right? So you will see that, let me zoom out one sec, move to the left, yeah, move back to the right. You will see this kind of move, you know. Maybe go to 15 minutes. Yeah. If you're very lucky, you will see this move. Probably take this one, take this one, take this one. And then if you do a parallel of this one, you will probably get something like that. So we are talking about here, you know. If you're very lucky, you will see it below 124. So we will call that a lucky night. Because why? The market moves simply, and then you know, you just keep on sell back, every time 3, 5, 8 pip, then you can do 10, 15 trades, lucky night. So you see, the skill is very basic, but you need to depend on the market movement. Why it can happen? Because you've tested the top side, right? Now it's testing the bottom side, and it's testing the bottom side also in a very sensitive period, because testing the bottom side when we are having 2 days of EU summit. The highest chance for this to break down is this 2-day one. Why? Because they're having a summit. So if you are George Soros in the past, this is what you would do. No? You force it down, put a lot of pressure on the government sitting in there to decide one. While you're having the meeting and euro dollar is 120, you have to make some decision. One. Okay, this sort of thing happens. I traded this kind of market before. You basically will be put under pressure. Like let's say when sterling was under devaluation pressure and all that, there's a lot of political element involved. And don't trust me, currency can move under influence one. You'll find that there will be exogenous elements coming in that may be politically driven to force some decisions out of the EU by, if you don't, because see, the currency market is different from exchange market. In the exchange market, I mean in the stock market and any other market, you can suspend it due to volatility, right? In the currency market, if everybody is a seller, nobody is a buyer, it collapses. So who is to buy? Well, the German has come in to support its own, support the euro. So this kind of thing can happen if you're very lucky, right? But this is one of those rare cases that seldom happen in history, but I've seen it happen before. Sterling devaluation is one of them. All right. That the other one is the Asia financial crisis was another one of those things. A lot of these things can be sometimes politically driven. So today the market is poised to try this side. He has made his retracement, and we'll check later how much he can retrace. What I want you to do is to make sure you update this new channel and take away the other one. That one is not relevant because it has formed a peak, right? We mentioned earlier before that 125.20 is very significant. If you can get above that, then the whole scenario changed, right? You went to there, respected that, and then it started to turn. And of course, this was one of those cases that it turned due to those who were trading the last few hours lucky. It rebounded based on the fact that German finance minister said about half an hour ago when I was having my chicken, I saw that he says German is likely to compromise, and all that. So you will get a lot of this conflicting thing coming out, right? German is ready to consider some early measures that can support the Italy and Spain in terms of euro bonds and all that. So all these conflicting statements will create volatility, which is good, but we need volatility to trade, and watch your downside risk. Okay, so let's move on back to 10-minute chart. This is the most important thing to draw. If you don't see this, you'll be in trouble. And then, so very simple, right? The market will continue to test the downside, but initially, before it crosses over the blue zone and turn it red, can you imagine tonight if the blue support zone turned red? It's a lucky night, huh? The whole night very clear. But meantime, while it is testing and testing the downside, you should be mindful that your technique of trading cannot be overly ambitious. 3 pip is good. If you got it, take it, right? So let's go down to the 1-minute chart. Okay, in a 1-minute chart, do your Fibonacci retracement and see how bearish it is. %, retracement close to 50 is a bearish signal as far as the market is concerned. So for now, we'll take away all the other minor resistance. They are not relevant. The only relevant one is 124.85 because it broke down from here, and that particular resistance is ahead of 61.8, right? That 50% is about the max, and everybody starts selling after that. It's not a continuation pattern. You should never trade it as a continuation pattern because you have 50% resistance. So no, don't try this side. Wait for this side. And now is to wait for the breakdown of this. Probably will drift down this way and test the 0%. So if the market goes up, come back to here, then going through here to this extent of 30 pip is possible, but 30 pip lower here is possible. Why 30 pip up cannot let 30 pip down? So usually all those who bought will sell one, okay, the moment it goes below. So we'll take advantage of all that movement, and these are just the major points to look out for. The rest, if I have to draw one red line that is significant, I will draw this one, 124.36. For whatever reason, today, everything peaked at there. So I will draw a short red line there that I will only be concerned, it's not a thick line. I will only not say concerned, I will only think about not selling if I see it go above 124.36. Beyond that, I will just watch like a hawk where I can take advantage to sell for either 1 + 1, 1 + 1.5, 1 + 2, 1 + 2.5. It's up to you. It's your technique and your ability, right? If you got that one wrong, you lose money. You get it right, you make money. So it's nothing to do with luck in that sense. It's all has to do with your skill. The skill to decide at this short, should I do a 1 + 1? Or should I do a 3, for example? Okay, so if you're greedy sometimes at a wrong shot, you will end up losing money. So that part is really skill driven. So let's zoom in. So it's clear, 37, we've set our mind already. Now, how the market moves down is unpredictable. Impossible to predict. No indicator in the world can tell you how the market is going to go down. Is it going to now suddenly drop to 07, for example? Who knows? Nobody can know. Why? It depends at that very moment in that 10, 20, 30 seconds. Are there at that moment more seller or more buyer? It's a liquidity driven thing. If at that point in time, more seller and the buyer suddenly is still sleeping, it will drop on, 12 pip. Agree? Then suddenly the buyer wake up and say, hey, I dropped 12 pip, I wanted to buy it. Lucky I waited a while. Then he buys, it goes back up again. It's at that point in time. In currency trading, when you trade in the 10-second chart, it is a volatility and liquidity at that 10 second, 20, 30 seconds, right? So then you will have to trade with your experience. In this short, do I do 1 plus 1, 1 plus 1.5, 1 plus 2, or 1 plus 2.5? All that is a matter of experience, okay? And not sure, play safe lah. 1 plus 1.5, that's all. You're sure being right. Okay, it is when you're prudent, you will be. That's why in trading, the small will always be consistent one. Okay, so sometimes people who not very sure, then never mind. You just keep on making small profit first. Make sure you got 3 trades, make 1.5 pip. Then after that, then try a 3 or try a 2. Okay, that is very common prudent approach. So 10-second chart. 10-second chart generally will give you a lot more idea as to. So when it breaks here, 24 to 20, 4 pip run. 1 square, 2 pip. Today volatility not small, right? 1 square is 2 pip, Then when it break 20, 4 pip run. Yesterday when we do 4 pip was like so much, Yesterday's range day. Today, 4 pip is like that only on the screen. So it's actually a day that nobody do 1 plus 1, right? Why? Because every square is 2 pip. So people will do 1 plus 1.5 at least. So that means slippage 1, take profit. Take profit with what? Slippage 1, take profit 2.5. Right? From the point of entry. So if you're lucky, your slippage is half and you'll make 2 pip. So there will be a lot of 2 pip profit today, largely because you will get a 4 pip run, especially this season. Okay, it's good that you retrace, so you got a chance to sell again. If the market don't retrace, how can you keep on dropping? All right, that's why in trading you want to be taking a profit and get out, taking a profit and get out. When they go up, you say good. Correct. And those who sell and hold, bad. Okay, so trading is like that, right? You let the other guy die, it's okay as long as you live. So how do you survive? Those who sell here would have survived. Anybody sold here? 0.1, 0.2.